Hey there, this is Monday, April 7th. I'm Brian. I'm a big dumb animal. Informational purposes only. This is going to be a fairly quick video with limited editing because as we all know, over the last 4 days or so, the market has come down substantially. Stock market, crypto market, risk on assets. I want you to take a deep breath, take a step back, and we're going to talk about the trees and the forest. I'm going to give you a quick analogy, and then I'm going to tell you where I think things are going. Take a look at this. This is the Dow Jones. In the past month, New York Stock Exchange, Dow Jones, index of 30 stocks, down 12%. Okay, that's substantial, right? And people are freaking out. And people are saying we know exactly why it happened. It's because the current sitting president put on all these tariffs and blah, 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 blah. Okay. And people are looking at the trees, not so much the forest. Let's take a quick forest view. What has happened to the stock market in the last year? Down 3.5%. Well, that's interesting. That doesn't seem all that bad. Okay, that's the forest. So we're almost where we were a year ago today. But in the last month, we know things have been down substantially. So people are screaming, market's crashing. Well, I just did a quick grok request. And look at this. A market pullback is considered when it's usually between 5 and 10% of a market decline. A correction when it's 10% or more. What do those two things mean? Those two things essentially mean the market is in a bull, an upward movement. It's just having a small pullback or a larger correction. Typically, a correction might be, oh my goodness, people are investing so much money that price to earnings are out of whack. If the average, I'm just making this up, if the average price to earnings ratio over a long period of time for certain types of companies was around 15, and now it's around 30, well, that's out of whack. That's going to come back in line, and it's going to happen through a correction. Now, if it's 20% or more, they say, well, that typically means we're in or going into a bear market. So we want to pay close attention to what's going on. Now, let's look at the crypto market. Crypto market is basically risk on assets, doing the same thing as the larger, broader market. Now, markets like certainty, not uncertainty. We all like that. So none of us want to see that our crypto portfolios are tanking. But if you look at the larger picture, do you believe we are now in a bear market and everything's just going to continuously get worse, or possibly in a bull market with a pullback and a correction? Here's my sports analogy. I have 3 boys. I've mentioned that before. My youngest played football, wanted to play football. When he was really young, they put him into football leagues. So stay with me. This will make sense. They put him into football leagues based on his size, not his age. He was always a large, muscular, big kid. Big, thick legs, fast, strong, larger than kids his age, even though he was on the younger end of kids his age. So I took him out because they kept putting him with kids that, he's 8 years old and he's up against 11-year-olds. And they might be the same size, but they're quicker. Big difference between an 8-year-old and an 11-year-old. Not a big difference between 20 and 22, but a big difference between 8 and 10. So anyway, he gets to high school and he starts playing. I'm like, go ahead. Now you can play because now it's just age-based and everyone's on a level playing field. So freshman went the way freshmen would go. Sophomore he becomes a sophomore and he's large, he's quick, he's smart. They start playing him with the older varsity team and these kids are 2-3 years older. So you're talking about 15 versus 18 or 16 versus 18. He was on the young end again. And he's getting knocked around and he's getting chewed up, but he's holding his own. He had 2 choices. Okay. His first choice was, this stinks. I'm getting my rear end kicked. I'm constantly getting knocked on the ground. I got to get back up. I'm just learning my foot position. I'm just learning where to put my hands. He was on the line. I'm just learning leverage, all this stuff. These guys already know it. This is no fun. He could have said that and gone home. Just like you can sell all your crypto and go home. Or he could say to himself, this is going to be painful. I'm not going to enjoy it quite as much, but I'm going to come out the other end a much better player. Those seniors are going to graduate. I'm going to move up. I've got experience. And turns out he had 3 awesome years of varsity football, starter, offensive line, sometimes defense. But he did what he needed to do. He stuck it out. And so that's what's going on here. Do you want to go home or do you want to stick it out? Now in sports, and I love my kids being in sports because it forced them to do many things. He changed his sleep routine, his food routine, his weightlifting. He did everything he needed to do to try to get what? What did he ultimately want? Well, ultimately, they wanted, as a team, a winning season. Well, I want a winning season in crypto. Okay, well, what's a winning season? Let's say they play 11 games. A winning season is win 6. That's it. You could lose 5. You're going to have a winning season. But those 5 games might be no fun. You might get destroyed. You might play teams that just trample you into the ground. Again, you can quit and go home, or you can come back and fight next week. Same thing that's happening in markets like this. If ultimately we're trying to get a winning season, we may have 5 games where we get our butts kicked. Last week was one of those games. This week, maybe. Okay, so there's the analogy. When it comes to this larger market, we want a winning season. Personally, I believe we're still in an upward momentum. Do markets have certainty? Well, in a way they do, in a way they don't. Here's what I mean. Do we know why the markets went down? Yes, everyone's going to say tariffs. The current administration came out, put tariffs on, let's say, 50 countries, and the market said, whoa, we don't know how that's going to impact the earnings of the companies. That's what this is all about. It's about the analysts need to know what they think those companies are worth in order to figure out what they want to pay for them. And they want to know how this is going to affect them in the long term. Because the price you pay for a stock today isn't based on what you think it's worth today if you sold all the assets. It's based on the future value of earnings. So they're trying to figure out, well, are the tariffs going to stay in place? Are they not going to stay in place? How do these, is that country tariffed and that hurts company X, but that country is tariffed or not, and that helps company Y? So what's going to happen here? So in the big scheme of things, here's what's going on, in my opinion. And I agree with this. Overall, let's just say that we all in the U.S., or whatever your country is, let's just use the U.S. as an example. People in the U.S., they want to have the best possible standard of living. Let's just say within this country. Okay. So to get that, let's just assume that one barometer is GDP. If we have a high GDP and we're producing a lot of goods and services and we have resources and that sort of thing, we can get them at lower cost, then we might have better lives. Okay, let's just assume that's the case. Well, in order to do that, you want your resources, assuming your resources are limited, to go to the best possible source of use, to be the most efficient. Simple example, you got 2 companies, you got $1 million. You give $1 million to company A, they feed 200,000 homeless people. You give $1 million to company B, they feed 500,000 homeless people. You can only give $1 million to one of those companies. I would hope everyone would give it to B and feed 500,000 homeless people. Okay, that's the idea. If we can move our resources to where we're most efficient. All right, public sector, government, private sector. This is a simplification. Forget the fact that certain things need to be in the government, like military and whatnot. You don't want 50 militaries, one for each state. You want one larger one for the national. So there's national issues, but then there's state issues. Okay, well, for the most part, in many cases, money can go into the government through our taxes or can stay in our pockets and we spend it in the private sector. So the money can go from taxes into the government or over to the private sector. Where do we want it to go? Where is it most efficient? Many times you've seen that with the government with money is sometimes less efficient, particularly if it's going in and helping areas that have just had a tornado come through or something. Many times by diverting the money to private organizations, they save, 1,000 to help out 1,000 people instead of the government maybe helping out 200. I'm simplifying it. But the whole point is currently what's happening is they're basically first off saying with something like Doge, let's cut the budget. Let's take money and shrink this inefficient thing and move it over here to this efficient thing. Let's assume that that's true and that's going to work. If that's the case, it takes time. It doesn't happen overnight. Jobs are lost. Contracts are given up. Money's moved. It just doesn't happen immediately. It's going to take time. But ultimately, the belief of some people, myself included, is that if we can move resources to the more efficient use, we will all be better off in the long run. Long-term gain, short-term pain. One of the things is, when you talk about trade imbalances and tariffs, I don't like tariffs. But that doesn't mean that I think it's okay that Japan won't let us sell anything to them, but they sell stuff to us. as an example, like cars, whatever it may be. I don't think that's okay. I think we fair trade. If you make great cars better than ours, we'll buy your stuff. If we make great cars better than yours, you should buy ours. But that's not the case. So the current administration had a choice, and that is, let's say there's 50 countries, and you want to create new tariff agreements with them, new free trade agreements with them. You could tariff one this week. Maybe it takes 2 weeks to come to a deal. There's 50 of them. It's going to take 2 years to come to a deal with all those 50 countries. That's what I would call taking a big Band-Aid and ripping it off slowly. Tariff pain, markets, what's going on with the earnings of these companies, which countries next, 2 years of kind of not knowing and uncertainty in the market. The other option was tariff 50 countries right now. Rip the Band-Aid off. Market goes, poof. That's what happened. So this was going to happen under this administration. And even if this administration wasn't there, the next one was going to have to do it because deficits are out of control. $2 trillion deficit a year is ridiculous. The amount of U.S. debt is ridiculous. This had to come to some sort of an end, so to speak. So it's kind of like you can keep spending and going into debt, but eventually you're either going to declare bankruptcy or you're not. And the creditors are going to force you into bankruptcy. So this is us as a country, the United States, saying, you know what? Instead of being forced into bankruptcy, let's kind of take care of this ourselves and give a better future for everyone. All right. So it was a quick Band-Aid off. So the certainty in the market is they know exactly why the market went down. All these countries' tariffs went up. Now he's going to negotiate with all of them. So if it's going to take years for this to work through, moving of capital, negotiating with different countries, whatever it may be, you might say, well, then that means we're going to be stuck in this crap market for a very long time. Not necessarily. Markets like to see some certainty. Once the first couple countries we come to agreements with, then the markets will say, okay, things are moving in the right direction, potentially. Therefore, there's a little more certainty. We know which direction we're going, and possibly the markets will continue to go up. So what should we be watching? Well, personally, I'm watching all the typical crypto indicators, but really it's the broader markets and the stock markets and the economies and what's going to happen with all these tariffs. So to end this video, I just wanted to say I'm not all that concerned with the current correction. Let's see if we end up in a deep recession and everything just tanks. Is there a possibility? Yeah. Do I think they're going to let that happen? Absolutely not. I think it's in everyone, and by everyone, I mean the world's best interest, that these various trade agreements are come to some sort of an agreement. And hopefully we can all end up better off. That's the general idea. Let's let the world compete, and let's compete fairly. We want the world to allow the U.S. to compete with them, just like they compete with us, and every country competes with each other. So let's see where this falls out. Keep an eye on it. I'm not too concerned, but if you want to sell all your stuff and leave, that's up to you. If you want to stay in the game and see if we can end up with a winning season, stay in the game. But always, like I said, zoom out, look at the last year. The market's down 3.5%, could come down some more. Of course, the last month, that's the big pain. But keep an eye on everything. Personally, at this moment, I'm still in a bull run. Have a great day. Hope this was helpful. Calmed you down, made you look at the forest instead of the trees. Hope we can all make generational wealth together with crypto and have a winning season soon. Have a good day.